Well, thanks, Sam. And hello, everyone. Welcome to this session on overdraft practices weathering stormy seas. Our hope today is that we're able to bring you up to date on what's going on in the area of overdraft banking in the United States. And we're going to do a little bit of, and I mean a very little bit, of setting the stage, if you will, by reviewing or at least skimming through some pages that I've provided in your materials with a lot of source material. If you look at page 1 in your handout, webinar description and purpose, you'll see a bunch of bulleted items there, and I'm not going to go over all of them. The purpose in providing that information is to give you sources where you can find background information. And each of the underlined items within those bullet items is a hot link that you can use to actually go out and pull down the document in question. And I hope that this will become a good source for you in being able to pull down and investigate some of the places whence we've come with regard to overdrafts. I'm not going to focus an awful lot on that past history because it is, as we say, past. And all we really need to do, I think, is to kind of recap where we are and then talk about where we might be going over the next, several months with respect to overdrafts and overdraft payment programs. We're really going to focus on today's environment. We'll talk a little bit about the FDIC guidance and their FAQ, albeit that is somewhat old news, but there are some items in there that need to be clarified, I believe. We'll talk about the FDIC and its UDAP concerns about Regulation E problems with some financial institutions. We'll also talk about the OCC's proposed overdraft guidance, which has been proposed now for almost 2 years, and I doubt that we'll see it come out in that final form if we ever see it from the OCC. Nonetheless, there are some interesting ideas in there that reflect some of the OCC's thinking. And then we'll take a look at what's going on with the Bureau, the Consumer Financial Protection Bureau, and its discussion of overdrafts and accounts in general. We'll take a quick look at some recent consumer suits and some enforcement actions, and by the time we get through that, we will have exhausted our 2 hours, and not to mention your speaker, and perhaps your patience with listening to so much information about overdrafts. A word about those appendices that Sam alluded to. That 50-odd page file is really copies of a number of the guidance documents and other information that you may find helpful. I've already pulled them down. I've assembled them into these appendices. If you don't pull them down and print them, they are there for you to look at. If you want to just pull them down, look at them electronically, you may find that helpful rather than printing them out. I'm not going to spend an awful lot of time referring to those appendices during the presentation, but just know that they're there for your research. Among those appendices, of course, are the November guidance from the FDIC and the FAQ that followed it in April of 2011. The joint guidance on overdraft protection, which was issued back in 2005 and which is still an active document. The executive summary from the 2008 overdraft study that was done by or commissioned by the FDIC. And I'll let you know when we get to it why I included that. Not because it's particularly relevant now that there has been a lot of regulatory change since it was published, but because it creates a good framework for some other work that you probably want to be doing. Well, there's a document on there and guidance for managing third-party risk, and there is, in addition, a copy of the OCC proposal, a copy of a document that we have on Bankers Online called an Overdraft Program Risk Assessment, which you may find helpful, a news release on bank fees that came out from the Consumer Federation of America, which just gives you the flavor of what some of these consumer advocacy groups are talking about when they take banks to task as a collective industry, and you get the sense of the driving force behind some of the consumer activism that goes on in the country. There's a copy of the Bureau's Federal Register request for information, which was published last February. This was specifically for information from all participants in overdraft protection programs, whether they be consumers or financial institutions or third parties that operate these programs for banks. They were looking for information about how they work and what their impact is on consumers. And finally, there's a copy of the Bureau's, also February of 2012, prototype fee penalty box is what they referred to it, what they called it in their material at the time. It's a document that looks a little bit like a bank statement. It's sort of like an artist's rendition of what they might come up with respect to disclosing overdraft information sometime in the future. It's a prototype, and it's not something that you have to pay an awful lot of attention to, but it's out there. Okay, let's take a quick look at the status of guidance. The word guidance sort of suggests that that there's somebody out there that is trying to help you on the right path. And if we were talking about guidance from your parents way back when we were all kids, we remember hearing, "Now this is what I think. I've given you my thoughts. Now go do what you want to do." From the regulators, guidance is a little stricter. This is how we feel about it, and if you don't agree with us, you're going to be in trouble, is sort of what the regulators are telling you. Guidance doesn't have the same legal authority that regulations or the law certainly have, but they do. Guidance does have authority in the sense that your regulator can look at a failure to follow guidance as a failure to adhere to some of their ideas about safety and soundness, and particularly when you start talking about things like overdrafts. When a bank, shall we say, ignores guidance from their regulator, the regulator can come in and say, "Look, you're creating additional risk for the bank in the form of potential litigation risk. You're talking about safety and soundness risk because you could be allowing customers to get too far overdrawn and consequently causing charge-offs to your institution and therefore losses." Or it could be that the regulator feels as though the financial institution is relying too much on overdraft fees as a percentage of net income, as one example. The FAQ that was published back in April 1st of 2011 and has not been updated since then, it was a document that was put out by the staff of the FDIC in an attempt to clarify some of the language within the November 2010 guidance document, and because it is out there on the FDIC's site and has not been changed, I think that you can look at it as having the same sort of authority as the guidance itself does. That is, you can rely on the FAQ to represent the opinion of, or the official word, if you will, from the FDIC, even though it's only a frequently asked questions document. One of the things that we have to remember is that we're not operating in a vacuum where the only guidance actually with respect to overdrafts is with the guidance from the FDIC. We also have the little matter of the regulations that actually touch on overdrafts, and the first one that I'd like to mention, of course, is Regulation E. I'm taking them in alphabetical order, not necessarily in order where they were created in history. Regulation E, of course, has the opt-in requirement for I'll call card-related overdraft services. Technically, it deals with only ATM transactions and one-time point-of-sale debit card transactions. But for the sake of brevity, I'm going to call it card-related overdraft services, if you will.